This is your LMAX exchange technical update for Thursday, September 15th, 2016. Euro dollar. So on a short-term basis, there's no clear directional bias in the euro, though on a medium-term basis, the pressure remains on the downside while the market holds below 113.67. So any rallies that we see between now and 113.67 are classified as corrective, with the market seen putting in a lower top ahead of the next major downside extension back towards medium-term support at 109.12. Sterling dollar. So cable remains confined to a multi-week consolidation, a bearish consolidation, with the market expected eventually to trade back down towards those recent plus 30-year lows from July around 128, and then below there exposing a move into the 125 area. At this point, only a daily close back above 135.33 would compromise the bearish outlook. Dollar yen. Dollar yen remains confined to a well-defined downtrend, and the market is consolidating off the recent potential lower top at 104.32, which would be confirmed on a break to fresh 2016 lows below that low that we saw in late June at 98.99. Euro Swiss. Euro Swiss continues to chop around. The market is confined to a range trade between 108 and 110. A break on either end would be required for the market to establish some form of a trend. Until then, fading range highs and buying into range lows is the preferred strategy. Aussie dollar. So Aussie continues to trade lower after topping out ahead of the 2016 high several days back, and the risk now is for an acceleration on a break and close below 74.21, which will expose medium-term support at 71.45 further down. Dollar CAD. Dollar CAD is now in the process of testing some critical resistance at 32.54. A break above there, a clear break, close above, would open the door for the next major upside extension towards the 135 to 140 area. At this point, any setback should be well supported, with only a break back below 27.64 to delay. Kiwi dollar. So Kiwi appears to be topping out after recently putting in a fresh 2016 high at 74.86. The market will accelerate to the downside if we see it close below 72, which would then expose medium-term support at 69.52 further down. SPX 500. The S&P 500 has recently seen a sharp setback. At this point, a break below the recent lows that we saw around 2100 would do a good job of strengthening the bearish outlook and opening the door for a more intensified acceleration of declines back towards 1990. Inability to take out 2100 will keep the market consolidating and potentially expose the market to another move to the top side. Gold. So despite recent setbacks in gold, the market remains constructive overall and very well supported into the 100-day moving average, and is ultimately favored on any tests of the 100-day moving average to put in another higher low ahead of the next major upside extension beyond the 2016 peak at 1375 and towards the 1450 to 1500 area further up.